Welcome to the Tax Pro Show. I'm glad you're here. I'm Josh, the CEO of Knapp Business Solutions, an EA with over 20 years in tax experience. I'd like to take a few minutes to talk to you about the top 5 best tax practices for business in 2026. So if you're a business owner, you're in the right spot. We're going to get into it. So here we go. Number 1, know your numbers. I talk to a lot of business owners across the country. And the one thing that is surprising to me is how many of them do not know their numbers. If you don't have a good system in place where you have good record keeping and you're looking actually at a relatively current balance sheet and profit and loss, you've got to make a change, okay? Maybe you need to hire a professional that's helping you compile that data and get it into something that you can actually look at and look at your matrix around your company. If you're not doing that, you need to be. Okay? I can't stress this one enough. It's very important for you to do this. And if you don't have that data, get on it right away. Change it in 2026. Number 2, sub point of knowing your numbers would be resetting your mileage log. Mileage log reset is important. This is the time to do it. You have to log your mileage regardless of how you deduct your vehicle expense in your business. If you're doing a mileage reimbursement, you have to log your mileage. If you are depreciating the vehicle, you have to log your mileage. So the first of the year, you're going to reset that mileage log so you can start tracking fresh from day 1, January 1 in 2026. Then the knowing your numbers subpoint, you want to know your business budget. If you don't have a business budget, you need one. This is not super hard. This is not that big of a deal. Don't stress about it. Just put together a simple plan. If you don't know the best way to get started, I would tell you to look at your profit and loss from the last year and go through it and look at those expenses and look at your income and plan that out using that business budget. Then you can put in your growth matrix. So we plan on growing 20%, for example. Then you can increase and adjust those because the fixed cost will stay the same. You're going to have some adjustable costs. You can adjust those by a percentage of the increase. And then hopefully your gross revenue, of course, is going to go up. And that'll help you see what that net profit is. And the business budget is looking out the windshield. That profit and loss is the rearview mirror of what happened in the past. That brings us to number 2. And this is really cool because this comes from the OBBB. That's bonus depreciation. In 2026, you can expense 100% of new equipment that you place in service. So if you pay for it, you can expense all of that. That is really nice for business owners. So you're going to buy a $5,000 piece of equipment. We can go ahead and expense 100% of that. That'll help lower your taxes for 2026. It's important to know that because as you go through the year, any of those big expenses, we're going to track them, we're going to keep up with them, we're going to know what our deduction is, and we're also going to keep that in the back of our head for tax planning, right? You've got to have that information. You need to pay attention to those expenses so that you know what you're going to be able to deduct for the tax year of 26. That takes us to number 3. On this one, I would tell you, you need to get with your accountant and look at your business tax efficiency. Are you tax efficient? I can't tell you how many business owners I talk to that have no idea what tax efficiency even is or where to even start. If you're not working with your tax pro and you're not focused on your tax efficiency, or you don't even know what that is, then you need to dig in and know your numbers. Know if your tax efficiency. Do you know your flat tax rate? That's per dollar what you paid in taxes, right? You need to know how much of every single dollar goes to tax, federal and state, and that'll help you know if you're tax efficient. Then you can compare that to other people in the rest of the US based on income, and you know if you're tax efficient or not. And if you're not tax efficient, today's the day, now's the time, 26 is the year. Get tax efficient. That takes us to number 4, which is business structure. When I say business structure, most of the time people are thinking business tax structure. Yes, that is important, and that goes back to the 3, which was tax efficiency. But what I'm talking about here in business structure is liability protection. Do you have all of the things in place for good liability protection? Do you have potentially a riders on your home owner's insurance that will help protect you? Is your business formed in such a way that if there's a liability, you are personally protected and only the things in the business have the issue of the liability? If you don't know the answer to that, and you don't know if you have the correct business structure, then you need to get with a tax pro and a good attorney. And those guys are going to make sure that what you're doing has the right liability protection. Business structure is very important, and it's one of those things that people don't realize the importance until after they are in a situation where they need that structure in place. So let's not get the cart before the horse. Let's take the time and go back and ensure that we've got the right business structure for what we are doing. And then number 5, and I see this one, it is mind-blowing. And that number 5 thing is retirement planning. Most business owners are not worried about retirement. They're not thinking about retirement planning, not even in the least bit. What are they doing? They are focused on what needs to happen today in order for them to get money, get cash flow, make sure their people are paid. And then they do this for 30 years and they have no plan for retirement. They think, oh, I'll sell my business and I'll retire. That's a mistake. We need to make a plan today. On this one, time is on your side. Start early and invest often. Maybe that's a 401k for you. Maybe you're not big enough for a 401k and you're just doing an IRA. If you don't know or have not thought about your retirement plan, you should. Remember, every business owner has a couple of dates that are important. You have your best if used by date, and that's for every person in the company. And then you have your retirement date. And maybe you're like, I'm never gonna retire, I'm always gonna work. That's a good plan until you do depart the business. Sometimes it's health that causes that, and you don't have control over it. You need to have a plan. If you don't like the word retirement, that's okay. It's your savings plan. But this is where we're actively investing in something outside of our business so that later on we've got something saved and we're not caught off guard with having no plan at all. Well, I thank you for joining me for this little segment. I appreciate you watching it. If you've got questions and we can help you, reach out to my team. Go to tax.pro, fill out our little question form, and we're gonna get in touch. We want to help revolutionize your business, and if we can get involved and help you in 2026, don't wait. You can jump on that today. Hey, don't forget to like and subscribe to this video so that you catch our updates. I look forward to this 2026 year. It's gonna be awesome. Thank you for watching. Have a great day.